Happy Friday, traders. It's 8:01 a.m. Chicago time on Friday, the 28th of August, 2020. Thanks for joining me on what is a sunny and beautiful day here in Chicago. This is episode number 1829. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, it's really across the board. It's mixed to risk on ish. Um, Gold is up $33.20, trading at 1965.80, leading the board today, up 1.72%. No surprise there, given what the Fed had decided. Big rally in the gold yesterday. Remember, it was around 1900 or so yesterday morning, 1917, if I recall. And now it's even higher. The yen is up. The PM Abe is stepping down for health reasons, and the yen took a pop higher. The cable's higher, the euro's higher, so the dollar's down 53 cents, trading at 92.46. The dollar's the weakest this morning. So is the DAX. DAX had some numbers. The German GfK consumer confidence came in pretty bad. Was expected a positive 2.5, came in at negative 1.8. There were several releases overnight that impact the Canadian market. The GDP out of Canada came in worse, annualized, expected at negative 38%, came in at negative 38.7. And then the U.S. had personal income and personal spending both beat. And then what's left for today? What's left for today is wholesale inventories looks like we're out. Yeah, looks like Michigan sentiment final. Chicago PMI comes in at officially at 945, but to subscribers at 942. So we'll see the move at 942, and then the public will get it at 945, and then at 9 a.m. we get Michigan consumer sentiment. The final number. This is not as much a mover as the prelim. New all-time highs overnight, as well as yesterday, and the game goes on. It's really dip buyers. This is their time. This is their party. So it's been just climbing and climbing. Let's take a look at what was expected yesterday versus what we got. Yesterday, the primary expectation is a pullback. Was really looking for a pullback as a result of the fact that we balanced throughout the evening down below at 73, and then we popped higher right before the open, thanks to Jackson Hole. But the expectation is for the market to go back and revisit the 75, which is the scene of the crime, and then from there set up a base to push towards 3,500, but not take it out, and then was looking for a dip. If you recall, I talked about the market's likely to dip at the close. That was scenario one. That's what we see here, a push down to 75, push up to almost 3,500, and then a dip down into the close. Here's what actually happened. Let's clean these charts up. The market actually ended up coming back almost to the scene of the crime right before the open. So we didn't have, it was expected to open way up here and come back down. And so I was looking for that 75 test. We got 73.75, rotation to 94.25, and then we had this strong rotation all the way down through, right through the mid, the prior high, which I expected to hold. I really, this to me normally is a pretty decent setup right here. We had the opening swing high up here at 85.25. We had the prior high. The prior high right underneath it. We had a bunch of stuff all playing out all at in the same spot. The the opening swing high, mid, VWAP, all right here, and it just blew right through, only to make a higher low by a couple ticks. So we had an impulse, a small continuation, and a reversal impulse all the way back to the top of the range. Very, very difficult, very difficult to read early yesterday. Then we consolidated near the high. Near the high, we pushed to 98 and a quarter quite early, and then just held sideways. Really pulled back to the mid, pushed back up to 98, sold off from there, ended up all the way down to 64 before coming all the way back. This market yesterday was extremely contested. It traded both ways for most of the session. And was back and forth. Good volume yesterday. Look at that, 1.37 million contracts. But here's the important thing to take from yesterday. Yesterday, it finished where it started. So given all-time highs and the fact that it's finished where it started and the fact that it was completely balanced, look at this profile, completely balanced, very valid value area, value high right at the IB high, and so on. To me, and currently, one second, and currently we're trading at 94. We're trading right in here. To me, this market looked like it was really having a hard time sustaining prices up against the 3,500. The delta was sloping down pretty much the entire session. This looks exhausted to me, but again, I've said that the market has looked exhausted in the past, but it's one-time framing up, so the trend is firmly up. But it seems like with higher prices, it's weakening, which is what we would expect. We would expect the market to, the buyers to weaken at higher prices. This is the normal mechanism of the market. And so overall, another neutral day and neutral normal, and we finished with what is basically a doji. This brings me to the composite. I'm showing you this composite because I want to make sure we keep the big picture in mind. Again, each one of these boxes represents a week, and then the color change, the shading change, represents a month. So you could see here the month started sometime midweek between August and July, and these boxes tend to have higher lows, higher lows, higher lows. On the weekly, they tend to have higher lows, and they continue to have higher lows. A couple things to observe. Based on the action this week. The action last week was very balanced. So we had a lot of energy coming into this week, and that gave us the gap on Monday. This is very normal behavior, very expected behavior. However, now look at what's happening. We have the point of control stuck down at 34.16. As the market has pushed up, you probably noticed this, the volume has been fairly low until yesterday. So if you look down here at these bars, the volume is relatively light, somewhere around it's been between 800,000 to a million. Million's about what we expect. Normal is all the way up to 1.3 million. We had 1.37 million yesterday in the RTH. But volume has been thin as we pushed higher, and we've left the point of control below us, and we have this doji against new all-time highs. We have not seen this kind of setup before. The market is still at the upper end of the candlestick from yesterday. It's still quite bullish, and overnight we saw a burst right through the 3,500, which was interesting to watch. I'll show you that here in a second. Right here, this is the breakthrough the 3,500. So we pushed right up into the 34.98 even, pulled back, had an inside bar, and then we burst right through. And you can see the string of zeros here. This is a strong stop run, and it was very, very thin following that break. And then we pushed even higher into 3508 before we started to rotate down yesterday. Where's my scroll bar? Before we started to rotate down. So here it is. It went to 09. I think the overnight high is 09 something. Um, and then from there it started to find sellers, right? So this is the test above the 3500, but in the RTH, it's not letting go of these higher prices, giving us a bit of a weakish high. But overall, the delta is not shifting up this week with the price action, and we still have these weak structures beneath us. The range between 62 to about 32, I believe, is kind of weak, and then we have a gap underneath us, and then we move into balance right at the 3380 below. We skipped right through 3400, never tested 3400 from above. The market is really ripe for a turn and a correction. I am not telling you to look for a turn or a correction. I'm not telling you to get short. That's not my job. My job is to focus on what the market is saying currently, and what it's saying currently is it's a little bit extended. Okay. Now, if you look at the option market is saying that these prices are just not high enough, just not high enough. And for those of you who attended the public anatomy of a trade on the NQ yesterday, I talked about how the current trade reminds me of when I entered into the markets in 1999, became a professional in 2000. It's really, really frothy in terms of how it's how the stock market is talked about and how people are treating it or looking at it. This action right here shows that yesterday there was a two-way fight against the 3500, but we burst through overnight and we're holding the upper side of the range. So today it's really important, given that we're going into a weekend, and not this weekend, but next weekend is a holiday weekend. It'll be Labor Day next weekend. It'll be Labor Day next weekend, but this week we're going into the weekend with a doji from yesterday and a push against 3,500 with relatively poor structure underneath. So I'm being attentive. I will get aggressive on the short side. I did yesterday afternoon a little bit in the Nasdaq. That it didn't quite hold. It tends to flash back quite a bit, but. But overall, it's just I'm starting to see some cracks in the foundation of the rally up. The overnight session, pretty good volume, 247,000. We have basically what is a triangle type of formation. We keep putting in these higher lows and lower highs. It's a pretty balanced overnight session, and the action is saying that they're accepting prices higher. So if you look at where price is being accepted in the overnight session, at the point of control is at 97 and a quarter. Yesterday's high is 98 and a quarter, just a point below, and the market did its push through 3,500 and has traded a fair amount, created a separate distribution up there before falling through. So we're accepting these prices up here. Yes, it is long in the tooth, and oh my God, where's this market going? How could it be higher? 180,000 Americans have died, blah, blah, blah. But overall, it's accepting these prices. There's no rejection of these higher prices. We have to accept this fact. But if it does reject these prices, there are some really clear areas below to test. The delta is positive. Price overall is positive from yesterday's close. The overall overnight inventory is leaning long, and overall a pretty healthy rally market or bull market still. Here's what the heat map looks like. overnight. We still have some size, some liquidity at 3,500, which we would expect. Of course, that burst happened overnight, so we would want to take a look and see if we can hold those prices in the day session. A really nice push in the overnight session, a big stop run here, triggered off a lot of volume, and then took it all back and is consolidating in the middle in the overnight session. We could see that the heat map is not as clear as it normally is. There aren't clear areas where there's the market's being offered or bid, and this continues on. I have not changed the settings to my heat map, and it just seems like there are a lot of a lot of lines all over the place, and it's just the condition of the market. This is not a great market to trade. It's a great market to invest, unless of course you're just a buy the dipper type of person, and I'm not. So it's not as much it's not as interesting to trade or comment on, but we're here and we're going to stay with the story for as long as it takes, as the market goes one way and continues to be one way. With the Fed coming out, basically this was saying that they don't intend to raise interest rates, and they're not going to be interested in monitoring inflation, basically, is what they're saying. It makes for a very, very, very bizarre environment from a macro perspective. If anyone read the article by Jeff Snyder from yesterday that I retweeted, you probably saw how confused this action is versus the numbers. But very nice, very cool read, actually. Here's what we're expecting for today. Now, we've created a clear structure above here, and we've created a clear structure beneath here. Those are the stock zones above and below, and we are holding these prices, and we are holding in the middle. We're likely to open in range of yesterday. The value area is pretty is valid from yesterday. The overall expectation is the same as it is every day that this rally has taken place, is an open auction in range, in value, expecting it to drop into the prior day's point of control, consolidate, poke through, and then we would likely get the impulse back to the overnight point of control, and then we would test this 3,550. We would consolidate here for a while before going and checking that overnight high. This is what's expected into the weekend, and I'm looking for some selling into the close. That's the first scenario this morning. I'm looking for it to test lower, check for sellers, and then confidently move back up. The trend is your friend. The trend is moving value higher and higher and higher, and is not moving away from these high areas, which tells me that overall the market is accepting these prices, and we have to trade what we see, not what we expect or anticipate or think. The secondary scenario is an open that pushes immediately to the high side, gets to 3,500, pokes through, impulses down, comes back to the middle, and is pretty quiet pretty much for the entire afternoon before starting to dip lower and then back to the middle. I don't anticipate that we would be moving from this area. There is a doji on the daily here. It shows along with the action, the neutral day, the balanced day, all of that stuff is showing that the market's kind of in an indecision zone right in here. So I'm expecting that to continue through today's session. Not seeing a reason for the market to take a position one or the other. It's run a long way. It's been a pretty strong week, so I'm looking for it to chill today. Okay, those are the key elements. Again, we're looking for the big areas below us: 74, 75, 80, 81, 87. And then we are on top of this 95 area, so it doesn't really count. And then 3,500, and then above there, 3,507. And then we get into a double measured move up here at 12 and 14. And then above there, 35.20. Those are the key reaction areas anticipated for today. And again, I'm going to see how it reacts before I step in and risk my funds. Pay attention to your risk today. It is Friday. Good luck. And don't forget to hit the like button. It is like Friday. Don't forget to hit the like button and to subscribe to the channel if you have not done so. Okay? Good luck, and I'll catch you on Monday morning. Take care. Have a great weekend.